Technical analysis is widely used in Forex trading because people believe the market moves in a particular trend over a period of time. The theory was introduced by Charles Henry Dow, an American journalist who created the first modern American stock index on July 3, 1884. Even today, the Dow Jones Industrial Average is still the most referenced market index and remains a good indicator of general market trends. In Dow's definition, a trend is formed if each new peak and trough are higher than the previous peak and trough. It is in an uptrend. If each new peak and trough are lower than the previous peak and trough, it is in a downtrend. Dow theory divides trends into three categories: primary trend, secondary trend, and minor trend. We can consider a primary uptrend as a rising tide, a secondary trend as a wave, and a minor trend as a ripple, each of which tends to push prices higher. But if the price peak is gradually reducing, then the uptrend is going to end.
If you want to watch the full version of the video, you can go to TradingLive or download the TradingLive app. Share it to your friends and learn for free.